Good evening and welcome to day three, Peeps and Partons 1.0, brought to you by Bid and Axe Nigeria. I am V, the Brown Creator, your moderator, and I'm delighted to be your spokesperson throughout this entire webinar series. There is so much that beginners don't see, and to help you decipher that is our speaker for today, a trader with precision and dexterity who not only poured out himself during our session yesterday, but is honored to grace us with his presence for the second part of this two-part series, What Beginners Don't See. Today, we'll be tackling a key aspect of Forex trading, which is asset correlation. And we're excited to have every single person tune in to listen to this insightful live webinar session today. Before we proceed, please ensure that your microphones are turned off. A segment of this webinar is designated to answering all your questions. So please send in your questions via the chat box or use the link to share your questions on the Telegram channel. Moving on, would like to introduce our speaker for today.
Hi.
The man of the moment. I am Dexter. Please say hello to our listeners.
I'm glad to be here.
Thank you
I
so
hope
much.
you all are ready.
Thank you for joining us.
Thank you.
So today's topic is quite interesting and exciting, if I do say so myself, asset correlation. But we are going to take it in bits. We don't want to go ahead of ourselves, so we're going to take it step by step. Let's talk correlation. In my understanding, correlation is a mutual relationship, a connection between two or more things. And in statistics, I would say it's the interdependence of variable quantities.
Okay.
So now, having that knowledge, I'm trying to bring it home to the industry we're in right now, which is Forex trading. So as with anything else, we can't walk through life without with the connection between two or more things. But very quickly, please share with us, I am Dexter, what is the relevance of correlation in Forex trading?
Okay. Thank you again. So, as you rightly said, correlation really revolves around relationship. Um, the relevance of this is you being able to make decisions based on added information.
Please,
Okay?
can you say that again?
You being able to make decisions based on added information.
Okay.
So if you're trading a particular pair asset class, your awareness of the existence of similar pairs, when I say similar pairs, means that their behavioral patterns are similar to the current asset you're looking at. Your understanding of their existence and your observance of the characters they show, during volatility sessions would be essential to making better informed decisions.
Thank you so much for that response. So, what are assets and why do they feel like an essential thing that a beginner or anyone must understand in terms of trading?
Okay. So you asked assets. Now when I first excuse me, sorry. I mentioned about pairs, okay. To be to be more professional, we can't say as a financial investor or as a trader that the only thing you're going to be looking at is pairs. In trading as a whole, there are various assets, a whole lot of assets that exist. And these assets have within them the capability of making you profitable if you know how to harness, um, if you understand exactly how their behavioral patterns are. So as a beginner, you want to first ask yourself, okay, what asset class am I going to trade? When you ask what asset class you're going to trade, you're looking at things like futures, you're looking at forex, you're looking at crypto, you're looking at bonds, you're looking at stocks. All of these are different asset classes. Within these asset classes are instruments that are unique to those asset classes. So let's say futures, we have indices futures, for example, and within indices futures, you have a pair like the NASDAQ. Okay, when you're looking at forex, we have instruments like Euro USD, GBP USD. When you're looking at bonds, you have things like the 10-year bonds. Okay, when you're looking at stocks, obviously you have like Apple stocks, Google stocks, things like that. So there is assets, and as I mentioned, the key ones are the stocks, you have the forex, you have the indices, you have the crypto. All right, this you have the bonds, you have the treasuries. These are key asset classes. And yeah, so I'm gonna leave it at that. There are a whole lot more. All right, so you want to identify what they are, pick within them the instruments you want to trade, and you're good to start.
Okay, so we keep hearing a lot about asset correlation. Why should we care about assets and how they move?
Okay, every single instrument within an asset class have their sister pairs, okay, or their sister instruments that behave closely as they do. To make it more practical, when you look at the GBP USD and the Euro USD, for example, you would observe that 70% of the time, when we have a bullish day on the Euro USD, you would have a bullish day on the GBP USD. That's the basics to asset correlation, identifying what pairs move alike.
Okay.
The added information you could give to yourself to be able to be more versed would be you looking at things like, okay, what's the role of the dollar, for example, in the forex market? What's the role of the dollar again in the forex market? For every single pair that is associated with the USD, and they are associated in such a way that you're looking at the exchange between a currency to the USD. So for example, you have the euro to the USD, you have the GBP to the USD, you have the naira to the USD. When you have the dollar appreciate in value, you're going to most likely have the euro, for example, depreciate in value. For example, with the naira, we've had the dollar appreciate in value for a long time now. And because of economic policies we have within the country, we've not had the naira perform that well. Okay? And so it's performing in the opposite. So it's depreciating when you're looking at it in connection to the dollar. But for markets that get to trade every single day, you're looking at the Euro USD. Let's use that as an example. If the dollar is bullish for the day, you're going to have the Euro USD being bearish for the day. If the pound is bullish for the day, you're going to obviously have the dollar be bearish. So just by listening to that, you're going to understand that they move in opposite fashion. Okay?
Yeah.
Now, asset correlation, you want as a trader, as a beginner trader, to expose yourself to how other markets are behaving and use that information to make better informed decisions within your trading. You want to know what the bonds is doing, you want to know what the dollar is doing. And if you're trading an asset class like the stock indices and you're looking at instruments like the S&P 500, your understanding of what is going on within these other major movers like the bonds, like the dollar, Your understanding of how they behave and what they're doing is going to help you make better informed decisions. So, as a beginner, yes, yes, please study asset correlation at your best.
Okay, thank you so much for that. So, how can figuring out asset correlation make trading less intimidating for someone new?
So, I'll be real. Yesterday's we were really beginners, okay?
Okay,
Asset correlation is not really a beginner's thing.
okay,
It's not going to make it less intimidating,
okay.
okay? It's going to help you, okay, improve in your decision making, but would it make it less intimidating? Now, the thing about intimidation is just gain enough information, okay? Because if you are exposed to information that is succinct, it's actual, factual, you're less likely to be intimidated by whatever the market is doing because you know your knowledge base is going to serve you well, right?
Yeah.
When I'm looking at asset correlation, to a beginner it sounds like a lot. Okay, to a beginner it sounds like damn. So I got to look at the bonds. I have to see what the 10-year note is doing. I have to see what the 10-year bonds is doing. I have to see what the dollar is doing. And all I want to trade is gold. I don't know if you understand me.
Yes, yes,
Why
we
can't
do.
I just look at gold? If you're a beginner starting out, let me make you understand right now. You can look at just gold. Okay? If you're one that wants to make better informed decisions, you're not a scalper, you're a trader that looks for larger trend moves, weekly expansions, okay, asset correlation is going to serve you better.
Okay, now that you've emphasized on that, I think it's a perfect time to ask what a complete beginner should pay attention to when looking at how assets are connected. When you're looking at the relationships between these assets, what should a complete beginner be focused on? Or what should a beginner pay attention to?
Good. First thing you want to pay attention to is what are your pairs? What instruments do you trade? And I'd like to advise people to pick one pair and stay there. There are people that have made millions just trading NASDAQ, okay, just trading the Euro USD and nothing else. So first identify your pair. The second thing I'll say, if you're trading Forex, do well to stick to major pairs, okay? Do well to stick to major pairs. Why? You're gonna have the best of liquidity within liquidity injections, excuse me, within those major pairs. When you're able to decipher the major pairs, you're going to understand that most of them are dollar-based pairs. Okay? So the first information you want to pay attention to is what is the dollar doing? All right?
Yeah.
What is the dollar doing? If the dollar, okay, is bullish long term, then you should understand that your pair like the Euro USD will be bearish long term. So to make it simpler, seek your current pair, for example, the Euro USD, to move in opposite direction of the dollar.
Okay. So is this asset correlation subject something that one can do without in trading?
That's a tricky question. That's a tricky question. Yes and no. Permit me to say that I'll give my reasons. The first reason is this. If you've decided to be a type of trader like a scalper, okay, so let's first what type of traders do exist? You have position traders, you have swing traders, you have day traders, you have scalpers. These are the major types of traders. Now, if you're a scalper, asset correlation could help you. Okay? Looking for succinct signatures like divergence between the pairs you're correlating. What pairs can you correlate? If you're trading the Euro USD, I advise to look at the DXY and the GBP USD alongside. If you're trading the Euro JPY, you should always look at the GBP JPY. If you're trading Nasdaq, do well to look at the US 500. Okay. Now these are major instruments, and looking at this sister pairs, I will call them, would give you additional information to help you make better decisions while trading. And that's to say, yes, you can't do without it. But no, you can do without it, because I said it's a yes and no. No, you can do without it would mean your specific trading model should be such that its catalog of items to look out for is not dependent on what the sister pairs of this trading instrument you're trading currently need. So if, for example, as a scalper looking at the Euro USD, you have a mechanical model that focuses on very simple things, and within that model as you built it, you didn't think asset correlation was necessary. Okay, all right. So would asset correlation help you? I would say it's going to help you for real. But if you don't want to do with it, it's not compulsory. Okay, just ensure you have a mechanical model that is practical and has a good win rate, and you're good.
Okay, so back in the days when we're sitting in the classroom and the teacher says, and the teacher has been talking for a couple minutes, and then the next thing you hear is, for example. So it's time for us to have our for example moment. How can one put asset correlation into?
Okay. For example,
Yes, for example.
for example, pick the Nasdaq. Pick the Nasdaq as your instrument. Pick the New York morning session. We talked about time yesterday. Pick the New York morning session, which is going to be 7 a.m. to 11 a.m. And if you're trading the Nasdaq, I would like you to focus on, within this New York morning session, I want you to focus on 9 to 11. So what that means is that you're not taking any trade before 9, and you're not taking any trade after 11. I'm building a model right now for you guys. Now, every single day, once you open up your chart, okay, I need you to mark the last 3 days highs and lows. This is a practical session, okay, so take notes, and if you have further questions, obviously reach out to the team at Bidanax. You're going to get information, okay? So mark out the last 3 days highs and lows, and open up your 1 hour time frame. So I need it to be seated at the chart 8:30 latest, okay? And observe from the first 9 a.m. candle print. Observe looking at the Nasdaq on the 1 hour and the S&P 500 on the 1 hour. What are you looking for? You're looking for divergence. What is divergence? When you're looking at the highs and lows candle, normally these highs could be formed after price has taken out a previous high, or highs, equal highs, or the lows could be formed when price has taken out a previous low or equal lows. Pairs the Nasdaq and the US 500. Sometimes when you are bullish, you're going to observe that the Nasdaq would take out lows or equal lows or a single low, and you would see the S&P fail to do the same thing. The failure of the S&P doing that which the Nasdaq has done, when you are thinking of being bullish, is a signature to buy at the moment. Okay?
Okay.
If they are both are green, I like to consider that a low probability trade. You're waiting for the disagreement between the sisters. That is a hint to either be bearish or bullish. So why did I say you should mark out the highs and the lows of the last 3 days? These highs and lows of the last 3 days would help you frame targets, because you're trying to make profits, right? Starting out as a beginner, there are 2 ways you could use the highs and lows of a daily time frame. The first way is to seek for reversal patterns. The second way is to use them as targets. Okay? So the moment you notice the disagreement between the S&P and the Nasdaq direction, seek to aim for either of the last 3 days highs or lows. Seek for the nearest to you from where you're entering price. If you go study that, I'm pretty sure you're going to see a 60% winning trade model.
Okay, so what are the most correlated forex pairs?
Euro USD and GBP USD, Euro JPY and GBP JPY, AUD USD and NZD USD.
So are there any forex pairs that have negative correlation?
Negative correlation is price moving in the opposite direction to what the current asset is. So when you look at, for example, Euro USD, okay, look at the DXY, which is going to be its negative. If the Euro USD is bullish, DXY is going to be bearish. So the difference in them is it moving in opposition to the other, but that is hint. So if you're asking, just a little nugget, if you're asking how do I seek for this divergence in the forex pairs, for example, the Euro USD, GBP USD, and the DXY, what you're looking for is the moment when either Euro USD or GBP USD disagrees with either of them. And the other part which people fail to look at is normally when they push an equal high, guess what Euro USD and GBP USD will do? They will push an equal low. So the moment they disagree, whereby DXY purges an equal high and Euro USD and GBP USD fails to purge an equal low, that is a hint that you should be bullish. Sometimes Euro USD will purge the equal low, GBP USD fails to purge the equal low. Having had DXY purge the equal high, that also is a bullish hint.
Okay, I'd like to take you on, I am Dexter, on something that you said when you were speaking on assets. And from what I made of that, it had to do with trading with specificity. And you said something about picking a particular asset, not in your words now, but I'm saying, and being a god at it. So, do you not think that this could just be you putting a cap, or this could just be if someone were to do this? Do you think that they're putting a cap on themselves, or they are even challenging themselves to pick a niche, so to say, and be great at it?
Okay, so I like the word niche. I like when you brought that up because being a jack of all trades is good. It's not bad. Okay.
But does that really work in trading?
No.
Okay, why?
Yeah. Reasons is this. We've talked about the fact that concentration matters a lot in trading. A whole lot. As a beginner, because this is beginner's focus also. This is beginner's focus also. You need to understand that looking at too many things is not going to help you. Studying too many models is not going to help you. Having too many mentors is not going to help you. Okay? Having one mentor, having one asset, I would want to say one instrument you're going to trade, having one model is the best thing you can do for yourself as a beginner. That is you focusing on a niche. All right? So, it's very essential as a beginner that you please pick one thing. Now, about if you're putting a cap on yourself, now I'll tell you this, you're doing the best thing to you. You're not limiting yourself in any way. Because guess what happens when you can tell yourself, I understand NASDAQ like the back of my hand? Do you know what that feels like? That level of confidence that there are no surprises here. That means that you're going to be profitable.
Okay, 3 times you've mentioned divergence. And I'm sure some people are just tuning in,
Okay.
possibly, and maybe they're just catching up on the word divergence. So please, what is divergence and how is that relevant or important to correlation?
Okay, so now I wish I didn't bring out the word. Yeah, there are technical definitions to divergence. Okay, But the simplest
On a
practical way,
lighter note.
yeah, to
Yeah.
think about it is disagreement between correlated assets.
Okay.
When there is disagreement between correlated assets, the divergence technically is that you notice that you have correlated assets failing to do the exact same actions. For example, a pair like the GBP USD and the Euro USD, you have one of them failing to create a new low and the other one creating a new high. So say for example, a new major low was created on the Euro USD during the London session. The failure of GBP USD to do that is a bullish hint. Okay? So you're gonna have, you hear traders say something like, this correlated asset, Euro USD and GBP USD. Euro USD made higher lows and GBP USD made lower lows. Okay, so the divergence there is the disagreement in doing the same thing, and that disagreement is a hint for you to take action.
Thank you so much for
Yeah.
giving us more clarity on that subject. So, does a strong understanding of asset correlation guarantee profitability in trading?
A strong understanding, a strong understanding, and a proper application will guarantee profitability.
So, one cannot do without the other.
Yeah, because that you understand it does not necessarily mean you're going to apply it properly. Okay, people easily feel that because I know, you know this thing where you've learned theoretically how things are, and you're met practically, and the part where your brain has to think and make decisions is the major factor to you being successful in that stuff. So yes, the understanding is going to make you profitable only if you know how to apply it properly.
Okay. So, you talked about having a unified assets or mentor, etc., in trading for profitability. I see that most traders trade a whole lot of pairs, and some of them are still profitable anyway. So, do you see that as positive or negative, whatever side you're on? Why is that?
Okay, and that's a beautiful one. So this is the thing. The type of trader we talked about, did we talk about types of traders yesterday?
Please go on ahead and talk
Okay.
about it.
So types of traders. Okay, yeah, DJ, I just remember I did that today also, like
Okay.
right not too long ago. We have position traders, we have swing traders, we have day traders, we have scalpers. These are the major types of traders. So because these types of traders have different ways they trade, some things are advantageous to them and some things are disadvantageous to them. A position trader cannot stick to one pair, and he can, okay, he can. Let me say he can, let me not say he cannot. He can stick to one pair and be profitable. But what happens when the pair doesn't have his model set up? Does it go an entire 3 months without taking a trade? Well, that's one thing. So it's going to depend on the person. A swing trader normally is going to look at the higher time frame, the daily time frame, the weekly time frame, seeking weekly expansions that could last for more than 1 week, at least 2 weeks, at least 1 week actually, but it could last more than 1 week. Sometimes it could last just 3 days, depending on how large the expansion is due to volatility. So for such a trader that relies on the higher time frame, that's the weekly, the daily, the 4 hour, looking at multiple pair is an advantage to him. Looking at multiple pairs. Why is it an advantage? Because he's seeking either of the pairs giving him a setup. But if he's fixated on one pair, except he's comfortable doing that, then that's fine. But if he's not comfortable doing that, that could be a problem. So it's not negative that other people do it. You want to ask yourself or ask the person, what type of trader are you? Because if you're a scalper, I bet you looking at 5 trades during a session is going to handicap you, not help you.
Okay, so I know that some persons only stick to what they are told and how they are told to do it. But I do not believe that one can go far or attain the level of success that is enviable in this industry if you're just a hands down type of person. So, what are some questions that a person should be asking in terms of asset correlation to not just have a better hang of what this concept is about, but also to enable them have or experience growth that is sustainable in the forex industry?
Okay. So the kind of questions you want to ask is this. First, as a beginner, first question is, what asset class am I trading? The next question I'm going to ask is, within this asset class, what instruments are sister pairs that move alike majorly? Okay. And then the next thing you're going to ask is, what signatures would confirm to me disagreement between these sister pairs? When you're able to identify that, you're on the right track to making informed decisions trading either of those assets. So those are the three sets of questions I would like to give to any beginner.
Okay, so we've talked a lot about beginners from day one through to day two and to day three. That is not to say that beginners are the only persons that we have put or taken into consideration. But now, I strongly believe that there is someone who is listening to us right now who is not a beginner, who, for a matter of fact, I would like to assume has been trading for a while
Yeah.
and is still struggling with finding a strategy or a balance or a concept that works for them. Can you say something to that person right now? Something that they
Okay.
will always remember that I am Dexter said to them on day
Wow.
three of the live webinar.
Okay. Moments of silence.
Yes, please, by all means, take that.
Um, if I was to say one thing to my younger self, it would be put studying first. And then the next thing would be practice that which you've studied on a demo account because we're traders. Okay. Practice that which you've studied on a demo account for at least a period of 2 months. Gain consistency up to 70% win rate. Gain consistency up to 70% win rate. That way, you would be in a better position to trade a live account. The other thing I would say that is very important and I learned along the way is never time your success. Never. Never time your success. If you do that, you would apply so much pressure, okay? You apply so much pressure to the now. And doing that is not healthy to becoming a profitable trader in the future. So help your future self. Don't time it. Just go with the flow.
That was so inspiring. Thank you so much.
Thank
So,
you.
have you ever thought that your strategy was failing, but it was actually just correlation playing tricks on you? Have you ever had such an experience?
Okay, that come again. It sounds somehow tricky, so I
Okay,
want to be sure
yes.
I get it.
Have you ever thought, oh, my strategy is failing on a particular trade, only for you to realize eventually that it was just correlation playing tricks on you?
Okay, I'll say this, and I'll be very frank. If you found a model that works, and you were able to backtest it, and you saw it worked 70% of the time, that model failed in your hands more than 30% of the time is a human error. Okay?
Okay.
So for the times that I've taken losses on trades while building up, while growing up as a trader, for the times that I had failed, okay, these were times that I did not stick to my model. Asset correlation is just one of the confirmation techniques within my model. It's not the all and be all, but it's a key factor to my model being a profitable trade or not. Okay.
Okay.
And I can tell you for a fact that because it's that important to my model, the times I choose, the times I chose to, yo, I don't need asset correlation this time. It's gonna be bullish, for example.
Yeah.
I found out that the time I broke that rule of looking at all those things my model requires of me, I took a loss. So breaking your rules that formed a winning model is what is going to make you have losses. A lot of times it's human error. A whole lot of times it's human error.
Okay, so we have millions, I would like to call it, of traders who will never tell you that they're struggling.
Yeah.
Okay, that silence was necessary. Every single trader is profitable. As
So
far
they
as
say,
so they say, so they say. What do you think is the reason why it's so difficult for these persons to admit that they have failed before, or they are failing, or even that they're struggling? What is the, why is it such a roadblock to admit that I'm still trying to find my fit, I haven't made it yet? Do you think there is this influence from the side of the ones who are actually doing well and maybe showing off a certain persona that depicts it's all rosy?
okay, so those are two questions in one.
Yes.
Yeah. So the need for affirmation has caused a lot of traders failure. Don't go online when you're starting out and try posting your trades, posting your view on the market. That's not the thing you want to do. Okay. If you're on online, I would advise follow people that show you information, not lifestyle. It's good to know that you're gonna be living the good life as a trader, but it's not healthy to make that the focus. Why do traders not tell you they're failing? They want to look good. A lot of them are selling mentorships, so they want you to pay for their mentorships.
Mentors.
Yeah. And telling you they've had a 5 day losing streak, which is not abnormal because that's where the human error comes in. They don't want to tell you that because they don't want you to think they are failures. Then the need for affirmation, it's everywhere and it's not healthy. You don't need someone telling you you're a good trader. Do you know the easiest way to know you're a good trader? Look at your bank account. If it's not printing the bills in there, okay, it means you have more work to do. Notice I didn't say you're a bad trader. It means you have more work to do. And I would say that mentors, wannabe traders, influencers have made the industry um, luxury oriented. They've made the industry toxic in a way because they won't just keep quiet and be like, yo, I'm driving a rented Lamborghini. A lot of times that's the case. Yo, they want to tell you, I'm driving this Lamborghini, okay? And they want to tell you that's the good life. Then the next thing you hear that's so funny. Register. Join my paid mentorship. If you're making that much money, what's the need for the whole $20, $50 subscription? You see the real ones? If you're going to pay for any mentorship, look at what they're doing. Are they showing you live trades? Are they showing you trade executions? Are they hosting spaces to elevate you mentally? Because the ones that care about your growth are the ones that put in the work before you even brought in the money. For those ones, you should pay because guess what? You will gain more. I'm not an advocate of following a mentor that looks expensive. A lot of them are cheaper than what they were. So it's very important that you seek knowledge. Are they showing you that they have this knowledge? The knowledge is not in the cars or the houses. The knowledge is in price is going to go higher, and it did. Or it didn't. This is why it didn't. I made the mistake here. This is how I corrected it the next day. Honesty, transparency. And you can see that 70% of the time they are winning. That's the kind of person you want to follow.
Okay, so I see that most traders have this before and after
Mm,
phase in their lives. Before they started trading, and after they became profitable, so to say, in trading. So does this mean that trading is potentially a poverty alienation scheme?
no, no. It's just interesting to see that a lot of the people that are successful traders today came from nothing. And it's a blessing, actually. It's a blessing to see that it could transform lives that had no hope of living the lifestyle that they right now can afford is motivation for anyone that is in that position as well to see it as my life could be different. My life could just be different. So there are those that came from silver spoons that are still successful at trading, and it's a good thing also. But I would say that most of the people I've seen, most of the stories I've heard, they came from nothing. And it's fascinating also, an interesting study also, that the people that really seek change, okay, are those that do not really have that change they're seeking for. They don't have it. Okay, a lot of these people, a lot of these youngsters, youths, grown up adults, as a matter of fact, are in a position where they seek a better life. So trading is one of those things that's giving them that opportunity.
Okay, so it's actually humbling, quite humbling every time we come across these pictures, throwbacks that you
Mm,
get to share. This was me before I started trading, and this
mm-hmm,
is me now and after I have found my balance and
mm-hmm,
started making some money.
mm-hmm.
So, is there a limit to the tune or amount of money that can be made in the forex trading space?
Your only limitation is your mind, okay?
Okay.
If you think you can do more and you have this skill set and you dream about it and you put in the work, understanding that baby steps will get you there, whatever that dream is, you're going to reach it.
Okay.
But if within your mind you feel $1 million is impossible, it will be impossible.
Okay. All right. I would like to make a quick announcement right about now. In about 2 minutes, we would be taking questions from our listeners. As you know, a segment of this webinar is dedicated to answering questions from our audience. So please send your questions via the link in the chat box on the Telegram channel. And do not turn on your microphones. All questions are to be sent in as text messages, and we would take them on the show and have our speaker respond to all these questions.
Sure,
So
I'm
we'd
ready.
give about a minute for your questions to come in. So I am Dexter. While we're waiting on our
Okay.
audience to send in their questions, you said that it's human error that makes most traders fail. You know, does that mean that every strategy works and it's dependent on the human beings to be successful?
That's a good one. I don't want to sound controversial, yeah?
Please,
But
by all
no,
means, by all
not
means.
every strategy works.
Okay.
So the reason I said I don't want to sound controversial is that I'm not going to make names, all right now, for respects of some people's trading models, okay?
Okay.
Now, this is the thing. The one who is actually using the model and understands how to use the model is going to make that model profitable or not profitable. But obviously, you don't want to go start learning something that is less likely to be a winning thing. Okay. So I would always say do your research on the community because every trading strategy has a community. Now, it's an online community, not necessarily a particular group. Okay. So, for example, Falcon. If you're going to check out Falcon strategy, check out who are the traders, who is the founder of Falcon strategy.
Okay.
Look at their results. Again, remember, don't focus on lifestyle. Look at what trades they're taking. Look at the explanations to these trades. Are they hosting spaces? Listening, what are they saying? If you like that community, if you like what they're saying, if it makes sense to you, you've seen things that convinces you that it's a winning strategy. Now do your best to learn from the right source. Okay? But if you research on the community, okay, and you find out that it doesn't have much successes, and you even find out that most of their people are all about lifestyle, then that's a red flag. All right, they're most likely to be living on of affiliates, bonuses, broker commissions, and yeah, things like that. So do your research, see what the community is doing, ensure you learn from the right source, having agreed that this community has something to offer.
Okay, so we have received some questions from our listeners. Some of them are quite dicey. I don't know if we have the time to take all of them in detail, but we'll take as much as we
Okay.
can. The first one here says, what scares you more, the charts or your own lack of discipline? Wow, such a personal question. Did he tell you he lacks discipline? Okay, I am Dexter, please.
Okay, lack of discipline is most scary. Yeah, the charts would always do what it has to do for that day. It's all planned. It's all planned. It's gonna do what it wanted to do that day. Okay? However, that today I'm not in the right sync and I break my rules is a problem, and every trader needs to be aware of that. So every single day, one of the ways to stick to disciplines is to have a routine. Have a routine. What time you wake up, what time you go to bed. Train your brain to repeat little tasks repeatedly till it subconsciously gets you to doing those things. That way, it's going to be easier to stick to a trading model. If your life is not disciplined, if you're not someone that follows a routine and you're strict in your routine, you're less likely to follow a model and stick to it.
Okay, the next question says, have you ever sabotaged a good trade just to prove your fear was valid? Wow.
Okay, let's see.
Some questions are hitting home.
Have I ever sabotaged a good trade just to prove my what again?
Just to prove your fear was valid.
Okay. Yeah, I would say it's possible. I can't pick for certain when, but it's a likely thing. This is why it's a likely thing. You know when we talked about affirmation, wanting to look good in front of people, possibly students, and this trade was so good, but because you said it's not going to play out, okay? And then you close up the good trade. Now, this is the thing. If you felt uncomfortable and you closed that trade and it went way better than your expectations, it's not necessarily bad. But if your decision for closing that trade is because you said so that it's going to be bad and you want to, or it's not going to be good. And you want to, even when you're seeing signatures that that which you said is not likely to be the case again, but you want to keep your word to those listening to you, to those looking at you, and you close that trade. That decision is flawed, okay? Never make a trading decision on fear or in fear. Never make a trading decision when you want to save face. Do not also make a trading decision to look good, to look impressive to anyone. If you're live streaming and you see your model is not there, don't go in forming that you could do wonders, right? That's
Yeah.
gonna cost you, whether it's a win or a loss, okay? It's not about the gains or the losses right now. It's about you've broken your discipline. Now you've broken your discipline. Guess what that done to you? It's taking you a step backward. Tomorrow your mind is not going to be accustomed to the fact that you are disciplined, and so you're likely to break it again. That's just it.
Okay. So the next question, is it risky to assume that asset correlations will stay the same in both good and bad market conditions?
In bad market conditions, asset correlation helps you actually identify those bad market conditions, and asset correlation helps you identify also the good market conditions. So your question again, please. 'Cause
Okay. The question says, is it risky to assume that asset correlations will stay the same in both good and bad market conditions?
no, it's not going to stay the same. The signatures in good market conditions are specific signatures that tell you they're good. And those signatures are obviously different when it's a bad marketing condition. So they tell you they're bad conditions.
Okay. The next one says, can asset correlation change over time? And how can traders plan for that?
Beautiful. So it can change due to global decisions made by major countries that actually run the finance, okay, of this world. So for the last 5 years, we've had the 10-year bonds always move in the same direction with the DXY. But recently with these trade wars, we had a decoupling, okay?
Yeah.
Now it's going to fix itself. It's going to fix itself. So what you're going to do as a trader is once you notice that decoupling of something that is usually the case, what you want to do is take some time off the market or find another asset, another instrument and trade. You would do way better avoiding decoupled markets.
Okay, so we'll take one more question, and that would be that for the question and answer sessions today. Please ensure that you're following us on our socials. The handles are displayed on your screen right now, and send in your questions so they could possibly be prepped ahead. So our speaker for tomorrow can also take the questions because we do not have much time to take as many questions as we have received. Lastly, is forex trading your passion or an escape plan? This is so direct. The person wants to know if you want to run away, if this is okay, okay. Let's get serious. Our speaker,
I don't want to be broke, okay,
ever.
ever.
Mm.
I don't want to step into the store and look at price tags,
Mm.
okay? I don't want that to be my deciding factor to picking up what I need, okay? I'm passionate about the markets. That that's what makes me learn, even when I've come to a stage that I'm profitable. However, it's an escape plan from poverty. So I need to I need to ensure that I stay in my game so that I don't get back to a situation where I'm needy.
Okay.
Yeah, where I can't afford for myself and those that I love. So it's both, please. It's both.
Okay, so we have taken the most that we can for today. Tomorrow is day 4 of Pips and Patterns 1.0. If you want to know why you are failing as a trader and why your strategies are not working, and if you need an expert to walk you through every emotion that you experience as a trader, walk you through risk management as a trader. Tomorrow is certainly not a day for you to miss, as we'll be having Flames Tea and Eric Dialgo for day 4 of Pips and Patterns 1.0. It's been an amazing run back
I'll
here.
tune in tomorrow.
Yes,
I would love to
please.
listen to
We've
them.
had an amazing run with I
Yeah.
Am Dexter today. He's such a detailed person. I personally love how you go about answering your questions.
Thank
You
you.
personalize them, but you also do it in a way that is teaching someone else something that they can keep with them for the rest of their lives.
Thank
Thank you
you.
so much, Dexter.
Thank you to V.
It's been so impactful, inspiring, and insightful listening to you this entire evening. And to our audience, thank you so much for tuning in today. Thank you for all the questions that we've received. Unfortunately, for want of time, we were unable to take all the questions, but please do well to tune in tomorrow, same time, 6 p.m. to 7 p.m., to receive every single package that we have all wrapped up for our amazing audience tomorrow. We cannot say much for now, but do well to follow our socials and stay updated with every information that we have with regards to our sessions tomorrow and also that of day 5. Thank you for tuning in once again and see you tomorrow.